Good evening, this is eNCA Moneyline, your money guide. My name is Sikim Gabadeli. Coming up on the show tonight, a big drop in new car sales for January. R1 billion losses reported at the post office. And have you been saving? If not, we have all the answers this evening here on Moneyline. But first, your top stories. Growth in new vehicle sales hit the brakes in January. The National Association of Automobile Manufacturers says sales dropped by 642 vehicles. That's compared to the same period last year. The 1.2% fall brings total new vehicle sales to 52,306. But there was some good news. Sales of light commercial vehicles as well as heavy and extra heavy trucks recorded some noteworthy gains. Meanwhile, January export sales climbed by almost 3,000 units. The new business segment recorded positive growth of nearly 20% month on month. The average price for a vehicle stood at just over 314,000 Rand last month. NAMSA believes the market will see some gains during the remainder of the year. All right, let's crunch those numbers then. Joining me now is Nicholas Ngosi, who's with Standard Bank. Nicholas, thanks so much for your time this evening. A bit of a drop, was it expected in January?
Siki, hi, good evening. I think it is expected given the fact that there's not so much trade that happens in January. The first 2 weeks are basically written off because most people are still on holidays. So I don't think there's much to read into these numbers yet. All
right, but we can read something into the export sales data. I mean, that's up over 20%.
Absolutely, that's really phenomenal growth. And I think this is just basically how the year is going to be. We anticipate that there's going to be a very strong growth in the export market, mainly driven by obviously the growing demand in Asia, in North America, etc. So we see that continuing right throughout 2015.
Could a slip in growth in Europe, we know the problems in that market, could that derail our export growth in any way?
Siki, if you look at what's happening right now in Europe, particularly Greece and Spain, it's not necessarily economic growth issues, what people are fighting about there. So my view is it's not going to have such a material impact on the overall export numbers from South Africa.
Okay, let's come back to the domestic market then. Sure. What would be driving growth in on the domestic front, do you think, this year?
So this year, obviously, there's a couple of things. One is people are feeling a lot more optimistic given the current fuel prices. That does tend to have an impact on it if you look at also what's happening overall with inflation.
Yes.
So that means people will have much more disposable income and much more spending power. And the trajectory of the interest rates also, it's looking fairly positive at this stage. The view is that it will probably remain flat for 2015. So I guess people will feel that there's much more stability. There's obviously, of course, negative setbacks around some of the issues around electricity, what happens with the manufacturers, etc.
Yeah, I just wonder, affordability obviously has been a big factor driving the lower growth than what we've been used to in the past in South Africa. But you think that with lower oil prices, consumers feeling like they have a little bit more money in their pockets, that they might go into the car market more?
I guess that's the thing. They feel like they have a little bit more money in their pockets, but I think they might. But I think also people will start doing different things, such as, for example, looking at pre-owned cars, used cars, etc., looking at affordability. So affordability is still going to be the key driver of what people buy, but they're still going to buy.
Okay, let's have a look at the light commercial vehicles and the heavy commercial market. That really has stayed quite steady, and I always wonder, because this normally points to the Bakkie Brigade, people in the small business sector really starting to kind of spend and upgrade their cars and driving economic growth on that front. What do you expect for this year on that front?
So if you look at what is expected the economy to grow by, there's still growth.
Yeah.
And I think that's a key thing that a lot of us have to keep in mind, that whether it's 2.1%, 2% is still growth. So the Bakkie Brigade is still going to play their role it means that it's not going to grow as much as we would like to see it grow. It's not going to be 5% growth, but there's still a lot of activity that happens, particularly within the small, medium enterprise, the entrepreneur level. So we anticipate that we will start seeing a lot more stronger growth driven by that segment.
Okay, in terms of South Africans loving to change their cars every 3 to 5 years, that cycle, how does it normally work? Where are we in that typical cycle?
So we've had the last 2 years haven't been as strong as we anticipated them to be. Yeah. So also people have been holding back quite a lot because of the lot of uncertainty around what's happening, etc. But to your point, Siki, South Africans love changing their cars. So we've got this psychological barrier to say the moment it reaches 5 years or 100,000, which is very conservative, then people start changing their cars. And we don't see that pattern changing anytime soon.
Okay, what are your expectations for fleet and rental cars?
Fleet, obviously, is still going to be pretty much driven by how companies feel about how they feel the economy is doing, their own views around how they're going to be doing. So we still anticipate that they're not also going to postpone changing their fleet very much. They might postpone it for a couple of months, but we don't see much of that changing. So that's still going to continue to drive some of the sales, the government sales, to your point.
Yes.
Still going to see quite a lot of that. Just going back to the fleet story, so if you look at tourism, for example, we're still seeing very, very strong numbers of tourists coming through.
Yes.
So a lot of the fleet companies that are aligned to the tourist industry are going to continue to invest.
All right, we'll leave it there. Thanks for your time today. Nicholas Ngosi is with Standard Bank. Now, South Africa's manufacturing sector is getting back to normal after the festive season. The latest Kagiso Purchasing Managers Index climbed to 54.2 in January. The PMI gauges the manufacturing activity, and the latest reading is higher than the 50.2 recorded in December. The uptake was largely driven by an increase in business activity and inventories. This marked the second consecutive figure above 50, which indicates expansion in the sector. Analysts believe the drop in the oil price will continue to boost the numbers, but Eskom's woes could derail a positive start.
I think the only thing that we need to look out for is this whole issue around load shedding. You know, if we see in the next month or two, load shedding at phase 3 and sort of rolling blackouts, that will be very negative for the manufacturing sector and the economy as a whole. If in some way we can escape that, I think this sector is probably bound for a bit of a sustained recovery for the foreseeable future.
Well, there's more bad news in the mail for the South African Post Office. The Post Office is now expecting a 1.3 billion rand loss for the financial year ending in March. But the auditors, Deloitte and Sizwe Nsaluba Gobodo, say it probably won't be a going concern by then. The Post Office financial report was handed to Parliament last week, 4 months late. Fruitless and wasteful expenditure amounted to 41 million rand, with unauthorized expenditure well above 200 million rand. It's also lost over 5 million rand to fraud relating to the institution's treasury. The Post Office reported a loss of over 350 million rand last year, but the service remains solvent, with total assets exceeding its liabilities by 2.3 billion rand. Standard Bank has sold 60% of its London business to the Industrial and Commercial Bank of China. The deal is worth around 8 billion rand, which is 870 million rand less than the initial amount. It's now planning to use the money to grow the company both here at home and across the continent. Standard Bank is South Africa's largest bank by assets and operates in 32 countries across the globe. It traded 1.3% down to end the day at 152.50 rand a share on the JSE. Greece's new finance minister says his country must renegotiate a bailout as soon as possible. Yanis Varoufakis has been touring European capitals trying to drum up support for his government's anti-austerity policy. The minister held talks with Chancellor George Osborne in London. He's also visiting Rome. But should we care here in Africa?
Greece's new finance minister cut a relaxed figure as he strolled up Downing Street to meet with his British counterpart George Osborne. But this is a man with one of the most difficult jobs around, restoring Greece to financial health. Greece's economy is tiny compared to Britain's and South Africa's. That doesn't mean that what's unfolding right now in Greece is irrelevant to either country. What many investors fear is a game of chicken in which no one blinks.
The
Europeans are afraid that the Greeks will ultimately say, you must meet our demands, otherwise we might want to leave the Eurozone. It's blackmailing in the form of the very intelligent and smart finance minister. And he's already touring through Europe looking for allies for his debt haircut debate. This will be very pleasing to some in the Eurozone because others have so many debts too. But if we allow this, then the Eurozone will be morally in trouble, and that doesn't work.
And if Greece were to be forced out of the Eurozone, not only could that messiness infect the global banking system, it could lead to contagion to other European countries. And both Britain and Africa want a healthy Eurozone economy with which to trade, not a crumbling one. Mr. Varoufakis believes that can only happen if Greece renegotiates its bailout.
Greece should not be in the headlines. The Financial Times, the New York Times, the Handelsblatt. We will come to every European capital, like we're here today, with very sensible proposals for putting Greece off the headlines.
And with anti-austerity protests in Spain since Greece's new government took power, it's clear what is happening in Greece is making the rest of the world pay attention. And that's why George Osborne is among finance ministers far beyond Greece's shores that want the Greek situation resolved. What's happening there could affect us all if it gets out of control. Ollie Barrett, London.
After the break, we take a look at personal savings. You're watching eNCA Moneyline, your money guide. Stay with us.